So as we move through into the final stages of 2023, where do I think markets and portfolios are going to go? It's going to be, again, very, very interesting to see where the inflation narrative pushes the stock market, because the inflation narrative is governing where people are putting their assets. There remains a lot of money on the sidelines. There remains a lot of people that are saying, you know what, I don't want to get involved in this market because it's too difficult to call. And I don't blame them. With inflation at 3% in the US, looking to try and get that down to 2%, the ability of the US to do that is very much going to call into question what does well in the US. I think in the US especially, you're going to have a little bit of a problem coming from 3 to 2% on your inflation target, which I think is going to mean that interest rates are going to stay slightly higher for slightly longer than the stock market and the bond market currently expect. What you're going to see again feeding into that is whether the US is ever going to slow. The US economy has been extremely strong in 2023, and a lot of speculators, a lot of investors are starting to look at whether that's going to slow down. And there's a saying, the saying goes, when the US sneezes, the rest of the world catches a cold. That's very much in play in 2023. And you could start to see the US slow down, if there is one from an economics perspective, higher unemployment rates, higher job losses. If you start to see that coming through, you may start to see some volatility appearing in the stock market, which isn't something that we've seen too much of this year. So we're looking out for that. But again, a diversified portfolio of different assets is going to be the best way to combat that slowdown. If you have different pockets of investments in different parts of the world, you can look for that high quality trade across the piece. It doesn't just have to be in the US. And that's very much where we're looking at in the back end of the year, is trying to gain that high quality exposure to large cap companies, to healthcare companies, to some industrials. These things tend to do fairly well if a recessionary environment occurs. And whilst it may not occur and the market may continue to go higher and higher and higher, we want to make sure that our portfolios, and importantly our clients, are prepared for the downside, because that's what TAM's all about, is evaluating that downside and making sure that we're protected.